The outbreak of COVID-19 pandemic in 2020 changed the e-payment landscape in Nigeria, accelerating the adoption of instant payments and as more people transition to electronic channels for funds exchange in the wake of government-imposed lockdowns. According to the latest data from the Nigerian Interbank Settlement System, NIBSS shows that Nigerians have continued to abandon check transactions as a point-of-sale transactions rose to about 13.67 trillion naira in 3 years. That's between January 2019 and November 2021. The increase in the value of the transactions suggests that more Nigerians are embracing digital payment, leading to the surge in number of deployed POS terminals in the country, as total number of deployed POS terminals in the country increased from 764,589 at the end of October to 861,612 as at the end of November 2021. Well, I introduced him earlier. He's an investment strategist at Afri Invest Management Limited, Mr. Tebitokpe Omoshuyi. Good afternoon. Compliments of the season.
Thank you.
Yes, that report shows that increase to 13.67 trillion naira just in 3 years. Now, what do you think is responsible for this shift in choice of transaction?
Well, in the light of what you just mentioned, that is the outbreak of COVID-19 in 2020.
Yeah.
And, it affected the financial system. People were restricted from going to the brick and mortar banks. In fact, you have to think twice before you go to the bank because you have to take numbers and all of those things. In addition to the apprehension about the COVID-19, you don't want to contract the virus. So you would rather just do digital financial solutions. So really, before the outbreak of COVID-19, the problem was that, we have aged parents that could not trust technology. They didn't trust technology. You see, most of them would rather say that, they want to use their checks and all of that. But because the necessity was there in 2020, you don't want to die with COVID-19. You have to just adopt the available technology. So it led to the significant adoption of technology, particularly POS. Why POS is even very interesting was because, Proud 2020 or about 5 years ago, when POS came to scene, it was all about making payments at shopping malls and, but now we've seen broad activities that these bank agents do with POS. Yeah. Sometimes they even, you can withdraw money, sometimes you can even make deposit. They know how to do all of these things. So it has increased in the transaction in terms of both value and volume. So really, 2020 was a landmark in terms of adoption of digital solution. So I think POS is not an exception. We also see similar sentiment or similar trajectory at the ATM segment of the payments system, while checks, it's just going down the drain.
A good one, because with my guest earlier, we're talking about ICT and of course the impact of COVID. But like you mentioned, that aspect of safety and people being scared of being defrauded or cards. We hear a lot of stories of cards being snapped and all of that, and people get debited when they are not supposed to. What do you think about our level of safety with regards to the usage of POSs and all of that?
Well, I think I think technology is evolving, and this is why, in fact, in a bit to support your point that people are apprehensive, there's this global barometer. It's called Edema barometer, trust barometer. Okay. It measures the trust of people in financial products, services, and including other sectors of the economy: health, education, professional services. So if you look at financial services and technology, over the last 10 years, the trust in technology has declined, while in the last 10 years, trust in financial services have improved. So you know that recently, financial services are leveraging technology. Technology, people don't trust. You trust the financial system. So because we now have bank agents, they are now like the intermediary that will help to settle the risk. Because if you want to use POS, this person is your neighbor. So whatever happens, you can meet the person. So they are like, they are actually reducing the risk. A grandma can walk up to a POS, meet with the person is on the street, that will reduce, he knows the person. So if anything goes wrong, the grandma will hold. Yeah, so exactly, which is why it's going to be very interesting interesting, even in 2022, because you're looking at what is happening even in the telecom space. You know, the telecom giants, that is MTN and Airtel, they've gotten payment service license. So it's going to be very interesting. I'm sure they will also look at PoS as well, because you know, the financial system is becoming increasingly complex, and we all know that the system has homogeneous products. Whatever you get from GT Bank is what you get Stanbic Bank, Zen Bank offer you the same thing. So they want to look at frontiers that are not yet explored, which are where we have the financial exclusion. So bank agents are those people that can actually reach the unbanked, which is why, you know, banks are leveraging them heavily to reach frontiers that are not banked. And they're actually capitalizing on that to increase their profitability.
So this financial inclusion that we've talked about, the central bank has talked about it, everybody keeps talking about getting more people into the bank, the unbanked, getting them banked. Do you think this can drive that financial inclusion target by 2024?
Well, I think in fact, financial inclusion is very important for any economy. Every economy needs people to be included in the financial space. For instance, you know, one of the challenges the government grappled with in 2020 in terms of disbursement of funds to the most vulnerable people in the society was the fact that most of these people were not involved. They were not included in the financial space. But, you know, it's going to come easy for government to intervene if you have people included in the financial sector. All you need to do is disburse the money to major banks and they get it to the people. So financial inclusion is so important. Interestingly, something happened in 2022 report by EFINA, that's Enabling Financial Inclusion and Asset. In terms of financial inclusion, they reported that when you look at the category of financial inclusion, there was significant improvement in bank agents. You know, overall financial inclusion increased from 64 to 65, but it was largely driven by bank agents. Bank agent alone went on by 13%, while other segments, bank, loan from bank, remittances, all of those, they only increased by 5%. So it just consolidated the point that bank agents, you know, they leverage POS, they are actually driving financial inclusion, and with the development or the adoption of technology, or let me say telecommunication, in terms of subscriber, you know, subscriber was just about 182 million. Active mobile usage was just 182 million in 2019. We are close to 200 million currently. So that provide a groundwork for monetary policy authority, the financial system, and even the players to leverage technology, you know, to include more people into the financial space. So the only concern which they have to promote very carefully and consciously is the safety. You know, we mentioned that the only doubt about the using financial products and services is the fact that, you know, people are still in doubt. You don't want to have your money withdrawn from your account without your consent. And, you know, global financial space as well, they are looking at how to harmonize activities in that space to ensure that, you know, people build trust in technology, because everything now depends on technology. If you don't trust technology, if a citizen of a particular country don't trust technology, then development will be impeded.
Indeed, I agree with you. Now, let's see that graph. And I'd like to you to speak to that graph so that we understand some things. I see Nigerian payment system statistics, POS, ATM, value of transactions. I think we have that graphics on air. I want you to speak to it and make us understand, because I can see years rising from 2010 to about 2021. I don't know if you have something to say around this very graph.
The graph shows the interesting structural change in the Nigeria payment system. It is very, very interesting. If you look at from Cheque, you'll see major decline in terms of volume, transaction, in terms of volume. You see that it went down from 34 million in 2010 to 30 million, right? And this has continued. You will see similar trend in 2021. Same with, but if you look at ATM and the POS in terms of transaction, now POS is getting closer to 2 billion from just about 400 million in 2019 and below that in 2015, which is telling us that, you know, people are moving from the brick and mortar financial services to technology, and it consolidates or strengthens our point that we just have to ensure that there's safety. Once there's safety, and it's even positive for the financial sector, because the more technology you put into your processes, you know, and service rendering, it brings down your cost, and once cost is brought down, it increases your profitability, shareholder benefit, and the economy at large, you know, will benefit from it.
Let me play the devil's advocate here now. You know, when you talk about more money coming in, and you can, shareholders and all of that. But many will say, if technology takes over everything, what happens to the bank workers? Because many will say that these agents around might be cheaper for the banks to even use them in doing the business. Some might say jobs might be threatened. Are you thinking along that line? Or are you also of that belief that other new jobs will be created? Like some
yes,
say?
I believe strongly that other new jobs will be created. As a matter of fact, technology brings about increasing return to scale. In terms of overall wealth, it will improve it. The only thing what we'll have in an economy when there's technological disruption is what we call structural unemployment. Structural unemployment, like you've mentioned, it will change the kind of skill that will be needed by the banks. You still need people to power your technology. Your AI, you need people to structure data to man all this, technology. So you cannot totally separate human from the system, but capitalists will always look for opportunity to bring down costs and embrace new technology. But you can't do any of these things without people. We are talking about how data science, artificial intelligence, automation, all of these things are revolutionizing what is happening across sectors. So if you are not doing, if you're maybe emotional about it in Nigeria, it's happening internationally. So, and capitalists, like I said, they are after how they can bring down costs, and there's no rule in Nigeria that says you must embrace more of labor intensive compared to capital intensive, because the Monetary Policy Authority as well as other regulators want companies on the Nigerian Stock Exchange and even in the economy to remain profitable. It benefits the government, because the more profitable you are, the more beneficial you become to the government. In terms of tax, we're talking about, we've been talking about low tax revenue and all that. Why will government tell you not to bring down your cost and increase profitability so that the government will benefit from taxes? So now the onus lies on individual to begin to look at the job of the future. And this World Economic Forum releases it every 5 years. They release job of the future. Look at those things and ensure that one skill is tilted towards what is obtainable in the future. At some point in the commercial space, we talk about shorthand. What do you want to do with shorthand in this generation? We talk about typewriter. What can you do? What can you do with
exactly?
So all of those things.
It's evolving.
It's evolving. It brings about basically efficiency and effectiveness. Efficiency is bringing down costs. Effectiveness is the pace at which you do things. The time is reduced. You don't go. I can't remember the last time I've been to the bank.
Same here.
So that is beneficial to you. But if you say that, okay, because someone will be out of job, that person also have to understand that things are evolving, because that person also consume innovative products and he or she is happy about it.
Very, 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 very serious. Well, let's now look at the financial space itself, the banking space, as we wrap up in 2021. What are your thoughts? A lot of activities has played out in the financial space this year. The non-performing loans, a lot of moves by the CBN, which you talked about, Forex and all of that. What do you think, or what are your expectations in 2022 with looking at Nigeria's financial markets? Many say there's a lot of, it's stable. Even agencies have come to say that the stability, we are doing very well. But what are your projections?
So I think, interestingly, Nigeria financial space has really developed significantly compared to what happened during the global financial crisis of 2007 to 2009. There were lots of issues after which before then we saw recapitalization, and before then we saw in number of we had over 50 commercial banks, but now we have less than 25 banks, and we've seen, the central bank and even Monetary Policy Authority across the globe, they have learned, they are on a very significant point on the learning curve in terms of managing financial stability. That's why you see that the CBN is keen on what happens to every bank, and which even led to the introduction of the AMCON. So, as we speak, in fact, the Nigerian Depository Insurance Corporation mentioned that that over 90% of the depositors' fund in the financial space is secured. So, really, in terms of stability I think the banking sector, we have a high level of trust because the CBN is very, very effective in that regard, which is why the growth even of the Nigerian economy is going to be spurred by the financial system. So for 2022 and going forward, though we could see some whatever happens, we could see some merger, acquisition, and a number of all of that
too, because we've seen the recent one now happening between Titan and Union Bank,
which shows that that will be the situation of things in the financial space, but there won't be a major threat to the financial system again. For instance, look at what happened in 2016 in terms of non-performing loan. It went to as high as 16% as a result of the economic recession. But last year, or even in 2020 as a result of the COVID-19, it only increased to 6%, a little above 5% of the CBN threshold, which shows that there's now, an innovative way of managing the financial system. So depositors don't have so much to fear. So the only thing we'll continue to see over time is more money into the system so as to finance the growth we expect for the economy, because we already have a national development plan and everything is hinged on a solid financial system. If your financial system is just 21 trillion naira and you are projecting over 300 trillion in terms of money you want to spend on growth, the financial system will not be able to power the growth, because every economy is powered by its financial system. Financial system is actually the intermediary between the economy and the people. It's even the engine of every economy. So I still believe in the stability and the strength of the financial system, and we have system in place, structure from AMCON to the CBN. All of those structures, they are there to ensure that the system is stable and customers can continue to rely on the system. There's no problem when it comes to even depositors' fund.
Okay, before I let you go, you are an investment strategist, and we know that there's been a lot of challenges with regards to Nigerian economy, particularly security issues and all of that is affecting investments one way or the other. Even our markets, we see domestic players being very active. That's talking about trade at the exchange. Now, what are you thinking, or what are you advising, or what are you saying at the moment to investors? Do you see them coming in? Do you see that confidence coming back as soon as we expect in 2022?
We know that, pre-election year in Nigeria is characterized by a lot of uncertainty.
I tell you.
And interestingly, investors are interested in an economy where there's a kind of distortion, because that's where you make exceptional abnormal profits. Because when an economy is stable, you can predict everything. And once there's symmetric information, once information is known to everybody, you can't make profit. So regardless of the risk on the horizon, investors will continue to spot opportunities across all the financial asset classes in the financial market, ranging from the equities market to the bond market. Okay, for instance, let's look at what has happened in the financial market so far this year, particularly the stock market. The year-to-date performance is just about 3.8%, but we've seen stocks, EcoBank, First Bank, that have gained over 50% this year. So it has to now do with your knowledge of the markets and how to strategize whenever whenever you are able to spot a profitable point of entry. And you also have to understand the point of exit, which is why, which brings to fore the importance of having a financial advisor to guide you on your investment journey. But most importantly, your investment objective and risk appetite will determine how you play in the financial space in 2022.
I must thank you so much. Brilliant submission there. I've been speaking to Temi Tokwe almost through it there. He's an investment strategist, Afrinvest Assets Management Limited. Thank you so much, and do have a happy new year in advance.
Thank you so much.
Yeah.